What if your biggest tax break isn't hidden in a loophole, but actually buried in your pay stub instead? This bill could knock tens of thousands of dollars off your taxable income if you know how to work it.
Welcome back to Full Throttle Finance, a financial literacy podcast where we take big, complex topics and we break them down into bite-sized, relatable chunks. My name is Felicia, and I am your CEO at Clean Bay Consulting.
And I'm Allie, co-host and senior bookkeeper here. Whether you're running a race program or just getting your business off the ground, we're here to help you make small shifts that drive better financial performance. In the last episode of Full Throttle Finance, we broke down the No Tax on Overtime Act, which would let W-2 workers deduct up to $12,500 in overtime pay from taxable income and $25,000 for joint filers. We covered who qualifies, how much you could save, and why it won't change your paycheck, but it might change your refund. So we've already talked about the no tax on tip and the no tax on overtime, but today's episode is kind of like your tax season cheat sheet. We're walking through real-world examples so you can see exactly what all this means when it comes to file your taxes next spring. So reading about tax change is helpful, but seeing how it actually affects your refund, that's going to be what really matters. And this episode is going to be about helping people understand how the new tax rule is going to show up in real life.
So this is a calculator tool that we put together that's going to help us forecast different scenarios for different workers that we have in our labor force. It's going to account for base wages for hourly employees. It's going to account for premium overtime wages that employees might earn as well, and it's going to cover tips. So we're going to go over a couple different scenarios of maybe a standard base minimum wage position, maybe with and without tips, as well as somebody who maybe has a higher hourly rate that receives overtime, but maybe not tips. We're going to go over quite a few different examples to show you guys how this calculator works. And to start off, I wanted to go over how the calculator was built in general. So there's going to be 7 different sections to this calculator from what you can see on your screen. Over here, we have our earnings. So this is going to cover your hours, your base hourly rate, your overtime, and your tips, and your normal salary that you earn. The next section is going to be the above the line deductions, which is going to be our overtime deduction and our tip deduction, the 2 new acts that passed with the big, beautiful bill. The third section is going to be what the taxable income calculation is with these new deductions in place. It's going to take your gross wages. It's going to take the tips and the overtime deductions into consideration alongside the standard deduction, which for the examples for today, we're just going to assume that these people are single individuals, not married, no kids, just as basic bones as taxes gets. And same thing, the next thing is the tax brackets. So we're going to use this to figure out what portions of each of these examples wages are taxed at different brackets. And we're, again, basing this off of a single individual who is filing without any dependents and is not married for simplicity. And then down here, these last couple of sections are going to be our tax bill calculations. So the one on the left-hand side is going to be what it is without the tips and without the overtime deductions. And the example on the right-hand side is going to be what the tax bill calculation is going to look like with those 2 new deductions in place. If you aren't familiar with how your taxes work, when you are paid through payroll, a portion of your taxes are withheld with every single payroll that's processed. Your employer is required by law to collect that from you and to pay it to the government. So nothing changes throughout the year with your normal payroll cycles. All of that is still going to flow as normal. When you go to file your taxes at the end of the year, what you're doing is you're calculating what your tax bill should have been. And then if you've underpaid or if you've overpaid, which is probably going to be the situation for anybody taking the tips and the overtime deductions, we estimate if you owe the IRS more money or if the IRS is going to cut you a refund or if you have a credit to apply towards liabilities that you incur later on in your tax filing process. So these tax bill calculations are just to calculate what should have been collected from you, and we're going to compare them against what we calculate your estimated refund or your estimated credit might be if you were to take advantage of the 2 new deductions that are coming out this year. Do you want to go ahead and jump into a couple examples?
Yeah, let's do it. All right. So we're gonna we're gonna start with a server. Let's say they're out of Oregon, so they're gonna make $16 an hour, 40 hours a week.
Okay. $16 an hour, 40 hours a week. Okay.
Let's say
Any overtime?
Yeah, let's add it to overtime. I think they're gonna get around 3 hours a week. And then this server is gonna be earning about $75 a day in tips.
Okay. And how many days?
Oh, 5 days a week.
40. So let's say 5 days a week,
Yes.
right? 75 in tips and 5 days a week. Beautiful. All right. So we have our regular earnings calculation. That's just going to be your 40 hours a week. That's 2080 hours a year. And the hourly rate is $16 an hour. And so the total regular wages is $33,280. Overtime, 3 hours a week, is going to be equivalent to $156 a year. What we've gone ahead and done is, since the overtime deduction only applies to the half portion of time and a half, we split the overtime into overtime base, which is equivalent to what the standard hourly would be, and the overtime premium, which is just that half of the time and a half, because that's the only portion that is going to be deductible under the new law. So that's why you see $16 and $8 respectively here. Combined, they are the $24 overtime time and a half hourly rate that individual gets under the FSLA laws. But for calculation purposes, we are separating them out into different lines. So you have the overtime base wages for the time, and then you have the overtime premium wages for the half. And so their combined total overtime wages are $3,744. So that brings their total labor wages up to about $37,000. And then on their tips per week at $375, that's equivalent to making $19,500 in tips for a full year. So when you take their base wages, you take their overtime wages, and you take their tip earnings all into consideration, this individual is looking at making an annual salary or an annual earnings of $56,524. Now, everybody in the United States, as a single individual, you're able to take advantage in 2025 of the standard deduction. And what that does is that reduces your taxable income before the tax bill is calculated, and it's a set rate. And that is if you don't itemize your tax deductions. If you choose to itemize, things get a little bit more complicated. You should see a tax professional. But for the standard deduction, for what most people probably in these kinds of positions are going to claim anyways, the standard deduction for an individual in 2025 is going to be $15,000. So that is going to reduce their taxable income from $56,000 down to $41,000. So now let's look at our above the line deductions. So this person is going to be able to take advantage of 2 different deductions, the overtime deduction and the tip deduction. They are well under the $12,500 for overtime. Remember, that's just off their premium wages, that half of the time and a half pay. And then they're able to take advantage of the full $19,500 that they earned in tips because it's under that $25,000 threshold for the individual. And so now let's look at what this does to their taxable income, right? And so their gross wages were $56,524. They're going to be able to take $20,748 off of that taxable income amount before the standard deduction even comes into play, because they've got this overtime and they've got the tips on their W-2 in the correct boxes. Then they're able to take advantage of the $15,000 standard deduction on top of it because they're above the line deductions. And so that reduces their taxable income down to just over $20,000. You're looking at calculating a tax bill off of $41,000 versus calculating a tax bill off of $20,000. That's going to be a pretty significant difference. So let's see what those calculations actually do. So we're going to come down here and we're going to look first at their tax bill with just the standard deductions. So no tips and no overtime deductions included in this tax bill calc. The first $11,925 of their wages are going to be taxed at 10%, and that's not going to change, right? Their tax bill is being calculated off this 41,000 in this example. The next tax bracket goes up to $48,475. This 41,000 is not going to exceed that. So I'm going to update this formula here to be the 41,524. That's going to max out their salary, right? If we add these two cells up together, they equal the 41,524. And there is a formula check down here to make sure that we've got that in there correctly. And so what their tax bill would be with just the standard deduction is going to be $4,744. Now let's look at what their tax bill is going to be like with the above the line deductions taken into consideration. So adding in the overtime deduction and adding in that tip deduction. Nothing changes for that first 11,925 worth of their wages, right? They're still their $20,000 taxable income number right now is still above the 11,925, so nothing changes on that first line. But here on the second line, they're not getting anywhere close to the 48,475 at the top of this bracket. So we need to update this formula to be this 2776 value. And so we can confirm the total wages match here. And so with these deductions, their estimated tax bill reduces down to $2,255. This individual is probably going to get close to a $2,400 refund at the end of the year, or at least they're going to get that in a credit towards some other tax liabilities that they might owe for, a million other reasons.
Which is amazing. Getting $2,500 pretty much for I would imagine is a pretty average server income. That is awesome. I don't think people have been seeing that for a long time either.
No, and I know in 2026 the standard deduction goes up to $15,750 too. So for the 4 years that this act is going to be around, we're going to see it incrementally increase over the next couple of years. So do we want to do another example?
Yeah, let's do another one. So let's do a casino dealer in, let's say, Nevada. This is probably going to be somebody making around $20 an hour. That lines up with what a lot of dealers are making and earning today.
Okay.
So
and you said full-time?
This person's going to be full-time, and they're going to be doing about 4 hours of overtime a week.
Okay.
And
they probably made pretty good tips, right?
Yeah, they're making about $100 a day in tips.
Okay, so let's say 100 times 5. And that honestly might even be modest.
Yeah.
For a casino, right?
Yeah.
But yeah, this one is a little bit higher earner. We still have the normal 2,080 hours in the year at their base rate of $20 an hour. So their total regular wages is going to be $41,600. 4 hours of overtime a week is about 208 hours a year. Again, we have gone out and split that overtime base rate separate from the premium rate, since only the half on the overtime of time and a half is what's deductible. Combined, those makes the $30 an hour, which would be their normal overtime rate of $30 an hour. Their overtime base wages is $4,100. Their overtime premium wages is $2,080, which brings their total overtime wages to $6,240. So all of their wages comes into calculations around $47,000. They do make over the allotted threshold, though, right, for tips in the year. The deduction stops at $25,000. They make $26,000. So not all of the tips are going to be deductible in this example for this individual. They're going to be capped at that $25,000 in tips. Of their base wages, their overtime wages, and their tips into consideration, this person's going to make annually about $73,840. Take away that $15,000 standard deduction means that their taxable income is $58,840. Now, when we look at the above the line deductions on this example, they will be able to take advantage of some of the overtime deductions. So they've got about $2,080 in overtime for just that premium half rate going to continue to like just drill it on that because I think that's probably the most complicated part of calculating these liabilities. It's just that premium rate for the half of time and a half that's deductible. And then, like I said, they cap out on the tips at 25,000. Even though they made $26,000 in tips, only $25,000 worth of tips are deductible in this example. So when we look at what their new taxable income calculation is going to be with these above the line deductions and with the standard deduction taken in consideration, this individual starts out making $73,840 a year. You take out $27,080 for the overtime and tip deductions, strike to the taxable income number right there on its own. And you take into consideration the $15,000 standard deduction. This individual has now reduced their taxable income down to $31,760. So, this person, they're going to keep themselves out of the 22% tax bracket completely by just taking advantage of the tips and the overtime deductions for this example. So let's look down here at their tax bill calculation. The first $11,925 of their wages is taxed at 10% in full. Before the above the line deductions, their taxable income is $58,000. So that does exceed the second bracket, which goes all the way up to $48,475, right? So we're going to update this formula to be the full $48,475. And then we're going to add in a new formula on this third bracket that is going to take all of this into consideration. And so now we've got, and essentially what this formula was I took their taxable income and I subtracted the amounts we've already separated out to the 10% and the 12% brackets respectively. So we've got a formula check of 0. We've got our wages here, $58,840. This person's estimated tax bill was calculated at $7,859, so higher than the first example by far. But now let's look at what their tax bill calculation looks like with those tips and overtime deductions taken into consideration. The first $11,925 of their wages is still taxed at that 10%, and that does not change. But $31,760 does not meet the $48,475. So like I was saying, they don't even touch 20% tax bracket at all in this example. And we've got to update this instead to match $31,760. So we've got $31,760 here. Our formula check, it goes to 0. So we know that we've got the data in there correctly. So what they're looking at for their new estimated tax bill is a new bill of $3,573, which means that they're going to see a fat refund of about $4,200 or a credit towards other liabilities or whatever. That's big.
That's massive. Like the 73,000 that they got, their annual wages was nothing to scoff at. And then to get another $4,200 as a refund or whatever they've got at the end of the year, that's beautiful.
Yeah. I think this is a prime example of somebody who is really going to benefit from both parts of these bills that have passed, right? Or these legislation pieces that have legislation peaches. Can I just call them that from now on? This type of individual who makes a decent hourly wage, who banks on tips. And again, go back and visit our No Tax on Tips episode, but specifically, it's all tips. It's not just cash tips. Even though you're going to see cash tips everywhere, it's all of your tips. It's credit card, it's cash, it's everything that is voluntary. So if you get it reported correctly, I can't see how this is going to be a bad thing for the individual.
Yeah, and if you're able to take advantage of it for the next 4 years, you could really make up a savings to pay off some debt or do something really cool with your life.
Imagine not touching it for 4 years. Just take that refund every single year, put it in savings, like a high yield savings or something, and just let it grow over 4 years. You'd be surprised at what
$4,200 would end up being around $20K.
Yeah.
$20K in 4 years, that'd be awesome.
I don't want to say that that's a down payment on the house anymore. Because I don't think it is. But it's something.
All right. So let's do another example. Let's do a mechanic or a technician. This person is going to be working $45 an hour for 40 hours a week.
Okay.
Let's have them work 3 hours of overtime a week. and they're not going to have any tips because that's not
No
typical for their
tips.
job.
Okay. So this is a high earner. Their total labor wages are still coming in under that 150,000 mark. So even though they are a higher earner, they're not going to see any of the phase out on their income because they don't exceed that $150,000 threshold with their gross wages. So that's a good thing. They'll be able to take advantage of the full 12,500 if they were to work that much in overtime. But essentially their base regular wages, 45 an hour for full-time employee, is about 93,000, 156 hours of overtime a year. They're combined, and I think that this is where like the overtime really helps. People are, or it's going to be for those skilled laborers, right? We're talking like the people that come in and they work like a full extra shift a week and they have a high base hourly rate. And so their overtime rate, in essence, is going to be a lot higher as well, too. Like those are the ones that are really going to benefit the most from this overtime deduction that's in play. So like this individual, right, their base rate for overtime is 45 an hour, but their premium rate is 23 an hour. So the 23 an hour times the 156 hours, that's going to be what's the deductible portion for their overtime wages. But like I said, their total overtime is 10,000, and so that brings their total labor up to 104,000. No tips, so that's very straightforward. They get to take advantage of that standard deduction as an individual to reduce their taxable income by $15,000, which means that without the above the line deductions, their taxable income is right at around $89,000. For the above the line deductions, they don't have any tips, so they don't have any tip deductions to take into consideration on this one. We get to take $3,510 worth of overtime deductions on their tax bill. When we look at what their taxable income calculation is going to look like with the above the line deductions taken into consideration, we start them out at their gross wages of $104,000. We take away $3,510 for that overtime deduction, and then we take out $15,000 for the standard deduction, which reduces their taxable income, not by much, but it does reduce it down to $85,620. So let's look and see what that does to their tax bills. We know that they're going to max out these first two brackets, so we don't need to change anything here. 11,925 taxed at 10%. The next bit up to 48,475 is taxed at 12%. And then 89,130, like the next bracket goes up to 103,000. There's going to be $40,000 that are going to be taxed at that 22% bracket. So for this individual, we looked at it, our formula check goes out to 0, so we know we're dealing with the right numbers. The estimated tax bill is going to be about $14,523. Now, when we take into consideration what their tax bill will look like with the overtime deduction, we have the first 11,925 that gets taxed at the 10%. They do max out that second bracket, the full 48,475. So we're going to update this. And then the rest of their earnings are going to be filled out in this 22% tax bracket here. So our formula check dances to 0. We know that we're dealing with the right information. And so the new estimated tax bill is going to be $13,750. So this individual isn't going to get a huge refund at the end of the year, but they are going to get a $700, almost $800 refund or tax credit. So not as big as our first couple of examples.
The person is still making a really modest amount of money throughout the whole year, and then they're still getting a refund at the end of the year, not having to owe. And if they have any other deductions that they're able to take, refund gets bigger. This is still amazing. They're not having to pay. So
yeah, it's a good starting base, right?
It really is.
And two, that's just 3 hours of overtime on average a week. Again, if this is a skilled laborer, like a plumber, a roofer, somebody in construction or whatnot, right? Like the higher the hourly base rate for a skilled laborer, the higher the overtime, right? It's off of FLSA. It's time and a half. So if you have a higher base rate, your overtime rate is naturally going to be higher. And if you're picking up an entire extra 8-hour shift, then that's where you're really going to start seeing this deduction for overtime add up and be really beneficial for individuals.
100%. All right, let's do another example. We're going to do an admin role for an e-commerce type company. This person is going to be working $20 an hour, 40 hours a week.
Okay, another full timer.
Yep. And we're going to have, we're going to have 5 hours of overtime per week. And then obviously no tips for this person because, again, they're a professional and they don't get to have tips.
Make tips. Yeah. The no tax on tips specifically too, right? It's gonna be limited to service industries. Yes. So even if this employer wanted to add a tip option, chances are they didn't do that as of 12/31/2024, and they're probably not going to be on the list of approved industries that the IRS is going to release on October 2nd. Okay, normal 2,080 hours for full-timer multiplied by the $20 hourly rate gives us their regular wages of $41,600. 5 hours of overtime a week is $260 a year. We split out that base and that premium rate on the overtime. And so we've got their total overtime wages of $7,800, which brings their total labor wages up to $49,400. And then no tips. Take that $15,000 standard deduction off of the annual wages. That lands their taxable income at $34,400. The above the line deductions that they get to take advantage of is just going to be this overtime deduction of $2,600. No tips. That's it. And so when we look at the new taxable income calculation, taking those above the line deductions into consideration, we've got the gross wages of $49,400 minus the $2,600 for the tips and overtime deduction, and then minus $15,000 for the standard deduction, which means that their taxable income is going to reduce down to $31,800. And so when we look at the taxable calculations, $34,400 is less than the second tax bracket cap of $48,475. So we're going to go ahead and take that third bracket out completely. And then we need to update this to match $34,400. Our formula check is 0 so that we know that we're dealing with the right data. And so their estimated tax bill is going to be $3,890. And then if we look at their tax bill post above the line deductions, that's going to be, again, nothing's going to happen in the 22% bracket because the taxable income is $31,800. And again, that's below the $48,475 for that second bracket. So we're going to update this to $31,800. Their formula check down dances to 0. We can confirm the total wages here. And so no, their estimated tax bill is going to be $3,578, which is a small refund of $312. Not as impactful as the first couple of examples, but still, it's a refund.
It's a refund nonetheless.
Owing.
We'll do one more example. We're going to do a part-time bartender in California.
Yeah, and I wanted to do a California example because California has a unique setup for minimum wage, and it's not the only state that does it, but it is a state where there's a lot of people and there's a lot of different variances, so it's a good one to base this example off of. The state of California has a state minimum wage, and I think that state minimum wage is like $16.50 an hour. And what happens is that is across the entire state, but if you are in specific counties or in specific cities, those counties and cities are able to set higher hourly rates. And so for this example that we're about to do next, it's going to be a server that is in West Hollywood specifically. And in West Hollywood, the law dictates that minimum wage is something around $19.66 an hour. And since California is also a state that mandates that employers pay the minimum wage regardless of if tips are earned or not, this individual has a higher than normal hourly rate as a service industry professional, and they also get tips. So that is why we wanted to do this kind of an example.
Exactly. So this person, like we said, is going to make $20 an hour. They're only going to work 20 hours a week because they're part-time.
Okay.
No overtime, obviously, since you're part-time.
Nope.
And they're going to be making about $150 a night, 3 nights a week.
Okay. So for this individual, that's crazy. Like in comparison to the last example, right? It's the same salary.
Yeah.
When it's all said and done, except this person's only working 20 hours a week versus somebody who's working like 40 hours a week. But that's why we do these things, right? Because it's like these examples can vary across so many different states, different industries. Anyways, back to this. For a part-time individual, they're working about 1,040 hours a year at $20 an hour. That means their regular wages are $20,800. No overtime, so we don't need to worry about any of those calculations. But they do have higher tips than what we've been looking at per week, and that makes the tips earnings $23,400, and that brings their total, when they take their regular wages and their tips into consideration, that brings their total annual wages to about $44,200. Take out that standard deduction of $15,000 means that their taxable income is reduced down to $29,200. And so we look at the above the line deductions. This person does not get to take any overtime deductions because they don't work overtime. They're part-time worker, but they do get to take advantage of almost the entire full $25,000 tip deduction, which is great. And so when we look at what that does for their taxable income calculation, we have that $44,200 starting point minus the above the line deduction for the tips, which is $23,400, minus the standard deduction of $15,000, means this person's taxable income has reduced down to $5,800.
Yes.
So as the IRS would see it, this person is poor, which, I mean, granted, if you're only making $44,000, like you probably are feeling like you're poor if that's your only stream of income. But a lot of part-time servers, that's not like their only source of income too. But as far as this example goes, that's a big difference right there, reducing your taxable income from $29,000 to $5,000, almost $6,000. And so let's look at what that does to the tax bill calculation. So in this example here, before the above the line deductions, we've got $29,200. So that first $11,925 of their wages is taxed at the 10%. And then the next portion is going to cap out at $29,200. Our formula check goes to 0 down here, so we know we're dealing with the right data. So their estimated tax bill was calculated at $3,266. But then what actually happens is they don't ever leave the 10% bracket in this situation. So they're $5,800 when you take into consideration the tips and the standard deduction is the only thing that gets taxed, and it's at 10%. And so their new tax bill is estimated at $580. And so that means they're going to get an estimated refund of about $2,600 at the end of the year.
Which is awesome. Looking at the income that they've made, it's like a savings account of $2,600. And springtime next year, you get a nice $2,600 pocket year.
Yep.
Line your pocketbook. It's awesome.
Now you've seen us go over a couple of real life examples and how this can play out in a scenario. We're going to actually make this tool downloadable and usable for you guys at home as well. You've heard me say a few times, our formula checks are dancing to 0. Like, I'm going to go over how you can make sure that you're putting the data in right and that you're using the right data to calculate what your estimated refund might look like. These examples were specific for just single individuals, which are going to be the highest of tax bill calculations. If you're married, if you have kids, there's deductions and other things in place to kind of reduce that. So we just wanted to focus on the single individual income earners, just so that we can all understand the concept of what's going on here. And so we want to give you guys this tool so that you can download and play with it on your own at home. Now we're going to just give you a quick little tutorial to show you exactly how to update this tool for your own use in your own situation and what to look for to make sure that you are dealing with the right data, right? We have some formula checks built in right now. You can see like they don't dance to 0 on both sides. Those are going to be some key indicators to make sure that you've got the right data in there to begin with for your analysis. So you'll always want to start updating the spreadsheet in the earnings section. And what you'll notice is that there's some cells that are gray in color. So you've got it under this regular hours per week, you've got it under the hourly rate, you've got it under the OT hours, and you've got it under the tips per week. Those are going to be the cells that you're going to want to edit and modify or add data to when you do your calculations. And they should be pretty straightforward. Regular hours per week, how many hours per week do you work? What is your base hourly rate? How many hours of overtime per week on average? If you work like 8 hours of overtime a month, just reduce that down to what a weekly number would look like. Everything else is going to calculate for you automatically. And then in tips, notice this is tips per week. So you could just type in a dollar amount. If you think you make $500 in tips per week, you could put 500. Or if you're more like a day shift, you can say, I know I make 75 tips and I work for 4 shifts a week and I take home 75 each of those shifts. So you can either put a formula or you can put a number in there, but it's going to be important that you put the amount of tips per week that you're thinking you're going to make. And that's all of the stuff that you're really going to be able to modify on these first lines, like 1 through 18. Everything else is going to calculate automatically for you. The overtime deduction for the above the line deduction is going to pull over automatically. Same thing with the tips. And then over here on your taxable income calculation, all of this is going to pull over automatically for you as well. Tax brackets, you don't need to change anything here. Again, this is just for single individual income earners, not married, not joint filings. This is for single individuals, and these are the wage tax brackets for 2025 specifically. Now, the next sections that you're going to need to modify to figure out what your estimated refund is going to look like are going to be your wages sections, like these gray columns down here under both of these bill calculations. And it's going to change depending upon all of the information that you enter up here in the earnings section first. And it's going to be in alignment with the tax brackets over here. So essentially, when you're looking at this purple section for the tax bill calculation, no deductions, you're going to be using this green number here, whatever this number is. So let's just say, let's put some fake information in here again, 40 hours a week. Let's just say this is like a $55 an hour person. And let's just say that they get 5 hours of overtime a week, whatever, no tips. A formula check down here, and it's negative, it's anything other than 0, that is going to be your indicator that you need to update one or more of these formulas here, right? And so you're always just going to take this number in the green box and figure out how those wages get broken up across the different tax brackets here. So, the first 11,925 is 10%. So you fill out that 10% bucket first. Up to 48,475 are taxed at 12%. So you want to make sure that that is maxed out here, and that in this formula, it says 48,475. If this number is less than 48,475, that's where you update it to what it actually is. And you still look at their total taxable income, 120,000. That's going to exceed even this third bracket here. So what you're going to want to do is you're going to want to replicate this formula here, where it's going to be taking the total of that third tax bracket, and it's going to subtract the first 2 sets of wages that we've already taken into consideration, right? And it's not until we hit this fourth tax bracket between 103,000 and 197,000, that's where our taxable income lands. So we know that in this situation, we need to go even one step further, and we need to add this last tax bracket in. And so we'll take the 120,000 and subtract other wages from these other brackets. And then you can see our formula check goes down to 0 at that point. If you didn't want to mess around with formulas, you could probably come in here and do the math yourself, but it's easier to just walk yourself through, and you'll probably start to understand how your income is taxed better in this latter situation if you go line by line and go, okay, this amount of wages is this percent. This amount of wages is this percent. Tit for tat. And then how you know it's not correct, you'll see this formula check down here. And so the same thing just did for this purple section. basing it off of these green numbers here. When you get to the red section, post above the line deductions, you're going to do the exact same thing that you did here, except you're going to base it off of what the data is in these green boxes here in columns E and F. And so this one would go back to the first 11,925, and then we would make sure that this one is, the second bracket is capping out at that 48,475. 113,000 is still above that 103,000. And so we are going to do the same thing here. We're going to take the top end of that third bracket, 103,350. 3,550. And we're going to subtract these first two brackets of wages. We still, I put in an extra number. 103.
550.
350. Don't make, see? But that's why we built the formula checks in, so that you can see when you make those mistakes and that you haven't dispersed your income across the back brackets correctly. We built that in there for you. And then we can still see we're still off, right? And so that's when we're going to come in. 113 doesn't exceed 197,000. So we'll take this number and subtract these three. Then our formula check dances down to 0 for you.
That's such an awesome tool. And I myself am actually going to use it for my income and see what it looks like. I think it'll be really interesting to see comparing last year's tax return to what potentially we're going to see this year. It's going to be fun. I hope you guys use it. So next, we're going to address some of the common misconceptions that we've been seeing pop up over the last couple of weeks with these two bills. First off, a lot of people seem to think that this bill only applies to cash tips, which it does not, does it?
No, that's just not true. We went over it a little bit earlier, but this applies to all voluntary tips, cash, credit, debit, however it's received, as long as it is voluntary. If it is a voluntary tip and it is reported on your W-2, then it qualifies for the deduction.
So the second misconception that we're hearing is that the overtime is your overtime and a half pay. You get to deduct all of it, which is not true at all. It's just your premium. So Felicia, I don't know if you want to expand on that at all anymore.
Yeah, and it's a little concerning too, right? Because we've been auditing payroll providers and it's 50-50 on whether or not even like the payroll provider, and we're talking like Gusto, ADP, Paychex, JustWorks, all of those types of payroll providers, that they don't even necessarily have the information right. Some of them, like ADP, are the unsung heroes who have understood that is just the premium portion of the overtime pay. But then we have others like Gusto that have left it vague and make it appear, or some like what we found Patriot, right? Mm-hmm. They just straight up lied and said that you'll be able to take the full amount as a deduction. And that's just not true. If you go back and you rewatch the examples, that's what we're talking about when we talk about the overtime base pay and the overtime premium pay. It is only the half portion of the time and a half that is going to be deductible for the individual. And so, again, in a very simple example, if your base rate is $20 an hour and your overtime rate is $30 an hour because you get paid time and a half, only that $10 of the premium of the overtime pay is going to be what's deductible.
Those fine lines get you every time, don't they? Okay, so the third thing that we've been hearing is that people don't really totally understand how this is actually going to be a good thing. If you report your tips properly the way you're supposed to, this bill could really help you. You get a larger deduction at the end of the year, and that usually means a bigger refund when you file.
Exactly. Your paycheck is not going to change in any major way during the year, but at tax time, that deduction kicks in and you're probably going to see a meaningful refund. And that's only going to be if we can hone in on accurate pay rate reporting processes to get you to that point. Yeah. And also, just some food for thought, if you have allegedly been incorrectly reporting your cash tips and you start to record them accurately, programs like Medicare and Social Security that we all care about a whole lot are naturally going to see a boost in funding because wages that have never flown through payroll before are finally going to start seeing the light of day, and they're going to have taxes taken out or paid by the employer accordingly. If you didn't know, there is a combined total of 15.3% of taxes that are withheld or paid during the payroll process. And that 15.3% is split 50-50 between the employee and the employer. So when you are going through and having your payroll calculated, your employer withholds your employee portion of those Social Security and of those Medicare taxes that are due. They're called your FICA taxes. Your employer is required by law to withhold them from your paycheck and then pay them to the government. And then the employer owes an additional 7.65% on your wages that you never even see the light of day because it's a straight expense for the employer that is also captured when payroll is processed through the payroll processor. So if you're not accurately reporting tips, you are directly cutting funding from those programs, which is not ethical in any way, shape, or form.
Preach it, girl.
So it's hard though. Like I get it, right? People in those lower income jobs, like they rely on every dollar as it comes in. I get that. I'm letting you know it's only going to make a 7.65% difference for every dollar that actually flows through your payroll, but reporting it accurately is going to give you the ability to take up to $25,000 for a single individual off of your taxable income number. And the issue is just that we've had such lax rules in payroll and not so much enforcement on the compliance up until this point. The government budgets and they spend based on the actual funds that these programs receive. And that is why accuracy and honesty is so important. You're not just saying F you to the government. You're directly taking away essential funding from programs that you need or might be using already, or that you know someone who needs or survives off of because these programs exist. And if you don't report your tips accurately, you are directly underfunding those programs, whether you want to acknowledge it or not. That is what you are doing.
And I think these examples were a prime example of it's going to benefit you highly to start reporting your tips properly. So we really do hope that this is a nice incentive to make sure that people are following the rules, I guess you could say.
Yep.
This is a wrap on today's episode of our deep dive into the big, beautiful bill. Whether you're cheering it on or you have questions about how this could impact your paycheck or your payroll, we want to hear from you. And if this episode got you thinking, drop a like and leave a comment. And don't forget to subscribe so you never miss an update. We'll be following this legislation closely, and we would love to keep the conversation going with you. Thanks so much for tuning in, and we'll see you next Friday.